This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports fell 3% from January to June versus a year earlier, in the first-half contraction since 2013, as an import quota shortage, refinery maintenance and rising global prices curbed buying. Imports totaled 40.14 million tons last month. Data released by the General Administration of Customs showed on Tuesday, equivalent to 9.77 million barrels per day, BPD. That compared with 9.65 million barrels of oil per day in May and a record 12.9 million barrels of oil per day in June 2020, when refiners snapped up cheap oil to supply China's quick recovery from the pandemic.
Top oil shipping companies say they have tightened operational guidelines and deployed technology to prevent accidental breaches of sanctions, as the countries hit by ever tougher restrictions fight back with elaborate strategies to dodge them. Washington has ramped up shipping-related sanctions over the last 2 years to make it harder for countries, such as Iran and Venezuela, to export the oil that provides their main source of revenue. In response, Iran and Venezuela have developed sophisticated methods to bypass sanctions, which are also imposed to a lesser extent by the European Union.
Moving on to the top news in the energy sector.
The Brazilian government raised the mandatory blend of biodiesel into diesel to 12% from 10%, below this year's target of 13% in a bid to rein in fuel inflation amid high soybean prices. About 70% of Brazil's biodiesel is produced from soy oil, whose prices have risen due to strong demand and tight supply for soybeans. According to a statement from the Mines and Energy Ministry late on Monday, Brazil's National Energy Policy Council, CNPE, decided to raise the blend to 12% in order to avoid an excessive increase in the final price of diesel to the final consumer.
Crude output from 7 major shale formations is expected to rise by 42,000 barrels of oil per day in August, to 7.907 million barrels of oil per day, compared with a 28,000 barrels of oil per day rise in July, according to the Energy Information Administration's, EIA, monthly drilling productivity report. The forecast is led by growing production in the largest formation, the Permian Basin, where crude output is estimated to rise 53,000 barrels of oil per day in the month, offsetting falling output expected from the Bakken Formation of North Dakota. Natural gas production from the major shale basins was expected to increase for a second month in a row, EIA said. Next, we have the top news in metal markets. China's iron ore imports fell to their lowest in 13 months in June as shipments declined, and analysts expect demand could continue to ease in the second half. The world's top iron ore consumer imported 89.42 million tons of the material last month, down 0.4% from May, data from the General Administration of Customs showed on Tuesday. Iron ore imports in June were down 12.1% from a year earlier. In the first half of 2021, China took 560.7 million tons of the ingredient, though 2.6% higher than the same period a year earlier, according to the customs data.
Copper steadied on Tuesday but came under pressure from falling imports by top consumer China, and climbing inventories raised worries about demand, while a stronger dollar also weighed. Benchmark copper on the London Metal Exchange (LME) was little changed at $9,420 a ton at 16:01 GMT. Prices of the metal used in power and construction have traded in a narrow range for a few weeks. China's trade overall looked good, but its copper imports are a negative, one copper trader said.
We will now look at the top news in the agricultural sector.
Farm Office France Agri on Tuesday projected a sharp rise in French soft wheat exports and stocks as the European Union's biggest grain grower is set for a rebound in harvest production. Soft wheat exports outside the 27-country EU were forecast to reach 10.5 million tons in 2021-22, up 40% from 7.50 million in 2020-21, France Agri said in its first outlook for the new crop year that started on July 1. Soft wheat exports within the EU were pegged at 7.3 million tons, up 22% from an estimated 6.0 million in 2020-21. Soaring costs for sea freight could favor French shipments to nearby destinations around the Mediterranean, Marc Zarabi, head of Francigramma's crop unit, told reporters.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.